So children, today we are going to discuss the treatment of accumulated profits and losses and workman compensation fund or reserve. So your accumulated profit and losses comprises of the profit and loss account, that is the profit earned or the losses suffered, which are shown in the balance sheet, the reserve fund, contingency reserves. It's clear? So first we will take treatment of profit and loss account, credit balance, that is profit, given in liability side of the balance sheet. When the profit and loss account appears on the liability side of the balance sheet, it is said to be a profit, an amount for profit. So in that case, liability side balances are all credit balances. So we have to reduce a credit balance. So profit and loss account will be debited. क्रेडिट को खत्म करना है तो उसको डेबिट करेंगे, will be debited, and the old partners capital account will be credited in old profit sharing ratio. Old partners, old profit sharing ratio. Here there is no use of sacrificing ratio. It's clear? So what we will do, profit and loss account will be debited and old partners capital account will be credited in old profit sharing ratio. Now if the profit and loss account appears on the asset side of the balance sheet, that is your loss. So if P&L account is shown in the asset side of the balance sheet, it means that the firm has suffered a loss. Asset side of the balance sheet comprises of all debit accounts. The balances are debit balances. If we want to reduce the debit balance, what we will do? We will credit it. It's clear? So profit and loss account will be created and old partners capital account will be debited in old profit sharing ratio. It's clear? Again, old profit sharing ratio, not the sacrificing ratio. It's clear to all? So here it means that the profit and loss account, may it be the credit account or credit balance, that is your profit, or the debit balance, that is your loss, will be distributed amongst the old partners in their old profit sharing ratio. Now treatment of reserve fund or general reserve. This is also given on the liability side of the balance sheet. Either your reserve fund or your general reserve. They are also given on the debits on the liability side of the balance sheet, means they also have a trade balance. This will also be distributed among the partners in their old profit sharing ratio and the account will not be shown in the balance sheet. Therefore, reserve fund or general reserve account will be debited. Either it will be shown as reserve fund or it will be shown as general reserve. Account will be debited to old partners capital account in old profit sharing ratio. It's clear? Now the fourth is treatment of contingency reserves given on liability side. These are also reserves with another name, that is contingency reserve. They are also given on the liability side. Therefore they are also having a credit balance and they have to be scrapped from the books of accounts. Therefore they will be debited. Contingency reserve account debit to old partners capital account in old profit sharing ratio. It's clear? Now treatment of deferred revenue expenditure like advertisement suspense account or advertisement expenditure account shown on asset side. Now this is your deferred revenue expenditure. Deferred revenue expenditure means any amount that is being incurred, a very big amount that has been incurred as an expense in the current year or in the past, and the benefit of it is going to be achieved by the business organization for a longer period of time. That is called as your deferred revenue expenditure. So deferred revenue expenditures like advertisement suspense account or advertisement expenditure account are shown on the asset side of the balance sheet. Means they are having a debit balance. To remove the debit these particular accounts from the books, what is to be done? They have to be credited. So your two advertisement suspense account or advertisement expenditure account will be credited and old partners capital account will be debited in old profit sharing ratio. Means all these things will be distributed among the partners in the old profit sharing ratio. Now the most important thing here is the treatment of workmen compensation fund or reserve. In one case I will take reserve and in the other I will take fund. Both are same. Somewhere it is given, it comes in the question as workmen compensation fund, and sometimes it comes in the question as workmen compensation reserve. So over here there are two cases. When actual workmen compensation claim given in the adjustments is less than the proposed claim shown in balance sheet. What is workmen compensation? First, try to understand it. Whenever there is an accident that happens and the workers get some injuries because of the accident, then to compensate the loss, a fund is created by the firm. Special labor tribunals are there. The case will go to the labor tribunal and the labor tribunal will decide that how much money will be compensated, will be given to the worker who has met with the accident. It's clear? So that is the claim. And whatever we have decided, we also make a provision for it. And that is on the basis of the past year experiences or of the past experiences, we have decided that around some amount will be paid as compensation to the workers. Now it is to be compared with the actual claim that the labor tribunal has decided, and then the treatment is done. So over here, when the actual workman compensation claim that is decided by the labor tribunal given in the adjustments is, and this amount will be given in the adjustment that is below the balance sheet, is less than the proposed claim. Proposed claim is the claim that will be shown on the liability side of the balance sheet, claim in balance sheet. So I have taken an example. For example, in balance sheet on the liability side, workman compensation reserve is given. First I will take the example of reserve. Reserve is given, say rupees 10,000. Adjustment says workman compensation claim admitted rupees 8,000. We thought that 10,000 will be paid, but in actual only 8,000 is to be paid to the worker who has met with the accident. Now the treatment of workman compensation reserve. The proposed workman compensation reserve was 10,000 less actual claim admitted 8,000. So this 2,000 excess workman compensation will be distributed amongst the partners in the old profit sharing ratio. So workman compensation reserve account debit 2,000, हमें इसे कम करना 10,000 था, अब इसे हम 8,000 पे लाना है, तो 2,000 will be reduced, so it will be debited because it is a credit account, and to reduce it we will debit, and by how much? By rupees 2,000. And old partners capital account in old profit sharing ratio will be paid. It's clear?